I feel really strong about our founding fathers and many of their beliefs. They didn't say anything about allowing a private banking cartel to create money from nothing. Our Congress decides that they want to go to Iraq. This is important. If you're familiar with world markets and monetary markets, you'll understand that the dollar has been tanking. Hi, and thank you. My name is Daniel Hapney, and this is The Real Story. I'm here this evening because I was pretty concerned about things that I saw in the world and thought that maybe even in my local community I could make a difference and change the way people see things and maybe change the way that they perceive things, because some of what they're being told, I think, is not always the truth. And so my job here, at least my belief, is that if I can tell you the real story, I can possibly make a difference and make this town of Sharon and even our United States government a better place. I've got children. I've got concerns. I want to tell you about them. I was going to start my show and series off with speaking about money. Yeah, money's an interesting thing. You have to have it. Everybody uses it. I look back and I looked at the history of money, where money came from, you know, who were the first people to coin money, what other forms of money were used, and I found out some interesting things. One was, evidently, if I look up a dictionary description of money, money is something, it's a means of exchange. It's a way that we can all agree and utilize the elements needed to make transactions, to run businesses, to compensate people for their efforts. And so, in regards to money, the things I learned is money should be stable. That means that if people are paid or they save money, that money should maintain its value. And what bothered me was I noticed, even here in my little town of Sharon, that we haven't had that benefit for many years. Here in the United States, for about 140 years, we had no inflation. And to have no inflation was actually a pretty good thing. That meant that if you, whether you did work or you inherited money, whatever the case, if you had some money, for all the time you had it, it maintained what's called its purchasing power. Why that's important is, if you do save money from your efforts or your labors, then you'd want, after you once again saving that money, you'd want years later so that you'd have the same amount of buying power that you had. And many of the elderly residents in Sharon, if you were to speak with them and ask them maybe if they did acquire a home in Sharon, ask them what that home cost many years ago when they arrived here and hopefully raised a family and had a great time. I myself was raised in Sharon and I have enjoyed it. Why I say that is, when you ask them today the present value of their home, think of it. The house has supposedly changed value, or at least the rate of money or the quantity or units of money that they want for it has changed. And so you ask yourself, well, did the house, let's say 50 years ago, have a roof? Did it have a heating system, a toilet, running water, windows, doors, insulation? And if it still has all the same things today, maybe more modern appliances and all, what's really changed? To find the valuation, let's say 50 years ago, you could acquire a home in Sharon and raise a family. The home might cost you $20,000. Well, nowadays, that same home in Sharon might cost you upwards of $500,000. And once again, if the house is the same house, then you ask yourself, well, gee, what has changed? And the only thing I came back with is just the muscle, the power, the purchasing power of the currency or money. So that got me involved into researching and finding out, gee, what money is, where money comes from, who controls or creates money, and things of those nature. Things that I found out, and I figured I'd share them with you because hopefully this will make you think, especially when you go to the bank or, raising children, just teaching them things of saving and spending. Okay. What I came up with, or what I found, was that once again, for 140 years, we had what we considered, anyway, what I consider a stable currency. We used to make a $20 gold piece, right? The United States Mint, $20 gold piece. And guess what? We used to make a silver dollar. And for 140 years, the interesting thing was, gee, an ounce of silver maintained its purchasing power. And an ounce of gold, at least the ratio of about 20 to 1, you could get an ounce of gold if you had 20 ounces of silver. And some interesting things happened during the time period, let's say from the founding of the country in 1776. We'll go into the Revolutionary War. An interesting thing happened, and that was that during the Revolutionary War, wars tend to be expensive, which you all know today because, of course, we're spending money and we're shooting people in foreign lands. But wars tend to cost money. And to finance the Revolutionary War, our Congress issued money, and that money was called continentals. It was a paper-based currency, and as you know, whether you're buying ammunition or whether you're buying food or uniforms for the troops or cannons and all this good stuff, that once again took a fair amount of capital. And what our first president said in a letter back to Congress one time was that, gentlemen, it's taking a wagon full of this money to buy a wagon full of goods for my troops. What had happened was this issuance of paper money, they continued issuing it until finally it had no value. And the term, not worth a continental, came about. I learned this when I went to my local Sharon Credit Union, and in a nice information flyer, they had Frugal Freddy, I believe is their person. And Frugal Freddy came and he told me all about this. When I say told me, it was something I read and I enjoyed. And I knew of it, but I was surprised that even the people, in my local banking community would tell me about fiat, which is, paper currencies. So anyway, throughout our history, we've actually had 4 currencies, and we're on our third, quote, national bank. We had the Bank of America, and we had the Bank of America too. And both of those, after creating paper currency and going into fractional reserve banking, which we'll go into next, they both went defunct. One was shut down by Congress after their 20-year charter was done. And as a matter of fact, they both were shut down by Congress. And the reason for that was there were booms and busts based on this increased liquidity, this printing of money. But we'll go back in time. Let's go back in time to years and years ago. Years and years ago, there were goldsmiths. And goldsmiths' job, once again, was to make artifacts out of gold. And also, because they had the storage facilities, they would tend to maintain and store other people's gold because they had that capability. They had the vaults, they had the security. Well, what the goldsmiths learned years ago was that all their customers didn't come for the gold every day. And as a matter of fact, most of the people never came for all their gold. They might come for some of it because they had a transaction to do, whatever they were buying or selling. And so the goldsmith found it much easier to give his or her customers these paper notes. And the notes basically said that, gee, on hold with me or in storage with me is such a quantity of gold, and please accept this paper in lieu of that gold. And once again, the customers use those pieces of paper to transact with. And this worked out very good. And it didn't take long before many of the goldsmiths figured out that, I can actually create more pieces of paper than I have gold to back them up because, once again, how many people come and ask for all the gold all in one day? Why I bring this about is because we in the United States use a specific form of a banking system called fractional reserve banking. And that's primarily how it works. Banks are allowed to lend out most of all of their assets. And when I say assets, all of their deposits, to the point where I believe they only need to maintain anywhere from 4 to 10% of them on hand. If you remember stories with the Depression, what I think the big scare then was a run on the bank. And the reason the term run on the bank was because all the money wasn't in the bank. If all the depositors came in one day and said, we'd like our money back, because the bank, of course, is safekeeping it, that would be a bad thing for most banks. Well, here in the United States, we still maintain, quote, a fractional reserve banking system. And once again, its foundations or whatever came from a long time ago when the goldsmiths learned that, gee, people would accept pieces of paper. So when you think about the way things are now, what we have is we have a paper-based currency. In this case, it's called a Federal Reserve note. And it's not the first paper-based currency. Not only is it not the first paper-based currency in the United States, but it's not the first paper-based currency in the world. And the reason I say that is I'm gonna go back in time a couple times for you so that you can understand that this is nothing new. I forget there was some gentleman who said there's nothing new under the sun, but paper-based currencies are nothing new. Back around 1700 in France, well, they had a King Louis, and he had some wars, and it cost him money. And he met an interesting Scottish gentleman. Now, whether or not he was a gentleman, I don't know, but this gentleman's name was John Law. And John Law actually took over the national banking system of France, and he convinced this King Louis that he could print his own currency. In so doing, now the king wouldn't have to raise taxes to go fund the army. He could just print up some more money. And what happened in France, we all know, actually cost a lot of people their heads. because there ended up being a revolution, because they basically impoverished the people of France by stealing from those people, of course, all the money they had. When I say all the money, not just all the paper money, but all the real tangible assets that those people had were taken away from them slowly. And let's go back to our house in Sharon. For those elderly residents that live in this town, they probably understand now that a dollar doesn't buy what a dollar bought when they bought their house. Interestingly enough, when they, let's say they're employed and they receive some form of compensation in dollars, and so they didn't consume all the dollars, or they didn't use them all. They didn't spend them all in their house, or they didn't spend them all in their food. They put a couple in the bank so that when they retired, they wouldn't be a burden to their children or to others, and they could derive sustenance from this money that they had placed in reserve. So now it's 50 years later, and they're told when they go to the grocery store, well, that gallon of milk is going to cost you $4 US. And they're told when they go to the gas station that that gallon of gas is going to cost them probably about $2.20 today. Now understand, when they put their money in the bank, when they were working 50, 40 years ago, that the price of gasoline wasn't $2.20. I'd be surprised if it was at least, or it was 20 cents. So what's happened to the elderly here? Not just in the town of Sharon, you hear people, gee, I'm trying to survive on a fixed income, and I only have so much money, and the cost of everything's going up. My health insurance is going up. My taxes are going up. Yes, that's true. My, my food costs are going up. My transportation costs, my heating costs, my electricity, all my utilities. Where we go is we tell people, well, and I say we tell people, I listen to people many times who say that and say, well, gee, I just can't afford another increase in my fuel bill, whether it's a home heating oil or a gas bill or an electric bill, that it really bites into their, their ability to maintain their standard of living. What they're coming to the realization of, and whether or not they want to understand it, and that's why I'm here, is hopefully to get you to understand it, is that that purchasing power, that wealth that they had, has been, I don't want to say squandered, but let's just say it's been taken away from them. This is important in that, once again, that was something, if it was true money, okay, it would have had a stable value, like our money did for 140 years. Interestingly, I feel really strong about our founding fathers and many of their beliefs, and at least the documents they created and their willingness to give up everything they had so that we could enjoy the benefits of living one here in Sharon free, and also in the United States of America. Anyway, what the Constitution says that our government can do with money and for money is that they can coin money and regulate the value thereof. Well, that's an interesting thing. That's what Congress can do. They can coin money and regulate the value thereof. They didn't say anything about allowing a private banking cartel to create money from nothing. Something for another show. We'll just throw that at you. But what I found is, once again, of these elderly people in Sharon, and myself included, because I'm getting elderly every day, is that my money tends to go to three areas, and that tends to be a term called inflation. And if we understand what inflation is, once again, inflation, to many people, it's like a cloud. It's kind of vague, it's foggy. They don't know, what is inflation? Gee, all I know is that, I go someplace to a store and they tell me, did you bring more dollars? And I try to tell people when I deal with them, and I've been in sales and doing different things, but when they say, well, gee, the cost of this item, and I would say to them, I'd say, it's not that the cost went up. It's the purchasing power of the currency you're using went down. And to learn that, or just to understand that basic fact, that when they see, well, gee, my taxes in Sharon went up, it's not so much that your taxes in Sharon, quote, go up, as it is the amount of money it takes to fund the town of Sharon, okay? It takes more of these units, in this case, Federal Reserve notes. And people say, well, gee, I don't see much, I'm not getting much more for it, or, whatever they want to say, or when they go and buy a car, and once again, you go back 20, 30 years ago, a car was costing you $3,000. Now a good car is probably costing you $30,000. Something's happened there. And once again, the people it's affecting is two people primarily. One is the elderly, because once again, they're on fixed incomes. And some maybe, as this continues and continues, they struggle to survive. And then also is the youth, because to understand our banking system, and I will go into it deeper in a little bit, but it's putting burden upon the youth because they're going to have to carry this debt. Let me go into the whole debt thing so you understand debt, and this will help you understand fractional reserve banking a little better. And that is that, let's see, we'll take the person with the home 50 years ago. Let's say that you buy a home. Even in Sharon today, you buy a home. Okay, so you go out and you get a mortgage for that home. Well, you begin with the price of the home. Let's go the average price of a home, I think, recently, let's say about $500,000 in Sharon. So, gee, you're borrowing $500,000. By the end of the 30 years, the interest you pay on those on that loan will probably equate to 3 times more money. That's, let's see, 500,000, a million, 1.5, almost $2 million. Now, that's for a 30-year loan. So over those 30 years, you pay interest. And after paying the interest and stuff, there's maintenance on the home, okay? And gee, you may make some improvements in the home, okay? So once again, at the end of 30 years, we paid well over $2 million, okay? And for a home that cost $500,000, the interesting thing goes like this. How did all that take place? And it took place because, I'm going to have to back up one. We're going to have to give you an understanding of where the money came from, okay, before I even go into the next one. And that'll take us into fractional reserve banking. But here's how it goes. Our currency to date, its currency is called Federal Reserve notes. The Federal Reserve note is an instrument of debt. I know it sounds funny. You think, gee, if I got a lot of them, I got a lot of money. But basically what I've got is I've got a lot of debt. Okay, how is currency created? Where does it come from? At present, in the United States, our Congress decides that they want to go to Iraq. Hey, they got their reasons, okay? And their reasons may turn out to be fictitious in the future, but at the point they had their reasons. So they decide we're going to go to Iraq, and we figure it's going to cost us $200 billion. So they go to the Treasury, and it just happens to be after March, and the Treasury says, gee, we're out of money. You spent it all already, guys. And so they go further down the street in Washington to a place called the Federal Reserve Bank. And the Federal Reserve Bank always gives them the same answer. It's, well, sure, we'll give you money. So I'll get to do some role-playing where I'm both parts. In this case, I'll be Alan Greenspan because he was in before we went to Iraq. Well, Alan gets the phone call or he gets the request, Alan, can I have $200 billion? And Alan, of course, says, well, you betcha. Now, wait a minute, it's time for Alan to work. Alan takes out his pen, mightier than the sword, they say. He opens up his book called the General Ledger. Here's the note. U.S. Congress, $200 billion. Little note on the side, Iraq. Well, the interesting thing is, he's not done working. This gentleman has to work more. So then he picks up his telephone, and he calls the Treasury and says, by the way, boys, would you print up $200 billion and give it to George, or it could be Bill, or who's ever in charge, Ronald, right? But once again, give it to the U.S. government. Well, they don't do that for free, from what I understand. The Federal Reserve Bank gets something back from the government, which is from us. And what they get back is Treasury bills and Treasury notes. These are IOUs, mortgages, just like the homeowner. It's a promise to pay the money back to the Federal Reserve with interest. Now, that's an interesting thing. The fact that this money that didn't exist now exists, and we're going to pay this bank back interest. A couple notes we'll bring up in the next show, and that is, the interesting thing is, how many of my people, or my listeners and you people out there, understand that it's a private bank? I'll ask you, is it a private bank or a public bank? All right. So anyway, here the government gives them these IOUs called Treasury notes and Treasury bills. Well, what do they do with these Treasury notes and Treasury bills? Last time I checked, they sell them at greater than face value. Isn't that interesting? They don't even hang on to them. Because just think, if Alan Greenspan had a bunch of Treasury bills under him, he'd hatch them like an egg. But no, they sell them. And right now, I guess foreigners own close to half of them. So most of the debt that we've incurred, of course, we owe to foreigners. We'll get into how much we're consuming later. But these IOUs, these mortgages on America, basically, is interest on money created from nowhere. It's not like the Federal Reserve had that money in reserve somewhere, like, oh, they opened up the can and, oh, there's the money we left in here. No, that money didn't even exist. So let's go with it. Well, we gave them back an IOU. They gave us the $200 billion. And by the way, whenever you consider paper currencies, they're at their greatest value right when they're created. So the people that get to benefit the most is, in this case, the federal government, because they get to receive this money while it has its strongest purchasing power. And the bankers get what? They get interest on this. That's rather interesting, so that every dollar that you have, and I probably have some in my wallet, every dollar, if you look at the top of it, you should understand that it's a banknote from the Federal Reserve Bank. And that every one that you have in your pocket, you have in your bank account and everything, every one of them owes interest. And that owes interest part is important because that's interest that you're paying, you're going to pay in the future, and your children and offspring and anybody else you leave here that you may even love is going to end up paying also. And right now, I believe there's a good chance that we're never going to be able to afford to pay all that interest. But that's a whole nother story for another show. So we've got this money created from nothing. And we've turned around and issued these basically like bonds, interest-bearing notes called, once again, Treasury bills and Treasury notes based on the duration. And here we are paying interest on borrowing money from a private bank. Well, once again, that was just last week I wanted to go to Iraq. Let's say I want to do something else. And you'll understand how this money continuously gets generated from nothing. And when money gets generated from nothing, what happens is the money that's out there existing already, prior to that generation, okay, buys a little bit less because there's more of it around. And whenever there's more of something, its value goes down. And if you're familiar with world markets and monetary markets, you'll understand that the dollar has been tanking. When I say tanking, been dropping in value kind of rapidly. We're not alone as far as being the United States of America to have a currency that's been tanking. If we went back a little bit in time, you'd probably remember that, you know, Mexico defaulted on their loans. And good old, I believe he was our Democratic president, good old William Clinton decided that we should take money from the U.S. Treasury, that's us, the U.S. citizens, and we should bail out these Mexicans because their peso was losing value. Interesting, isn't it? Okay, so they had a paper money and it lost value. Well, let's go back to 97. I guess it was called the Asian monetary crisis. Well, during the Asian monetary crisis, countries like Indonesia, I like to use Korea as my favorite example, let alone the Japanese, but Korea had a currency called the won. Kind of sounds Hispanic, but won was the name of the currency. Won, anyway, lost his value, about 50% of his value in 6 months. Think of yourself as a Korean. And all of a sudden, you go to the bank, and by the way, the doors are locked because it's a banking holiday. They tell you you can't get your money, even though it's supposed to be your money, but you can't get at it. Why? Because today's a banking holiday. And by the way, we've had banking holidays here. The interesting thing is this paper currency, the won, losing half its value, who gained and who lost in that transaction? Do you think the people of Korea gained? Because when they did get their money out, 3-4 days later, it actually took a 6-month period, but when they got their money out, it only bought half as much stuff. Whatever the stuff was, maybe the stuff was food for their babies. Maybe the stuff was water because they needed clean water, okay? But do you think those people were benefited from it? And you ask yourself, how did that happen? Because it's interesting, because now we have what? We have the euro. I guess that's a competition for the U.S. dollar. And we have the U.S. dollar. And I don't know if you've kept track, but you know, once again, the fluctuating valuations of paper currency. How is it? You know, they tell you, it's almost so confusing. But what I'm going to try to help you understand is that paper currencies throughout history, you could take the Russian ruble, okay? I don't know if you remember when Russia defaulted, okay? But all through history, we discussed, the French, they went through paper money. That was John Law, that Scottish guy who came over and said, Louis, you don't have a problem. We can print all the money you need. There is one thing that they usually have to do, though, whenever they want to bring in a fiat or paper-based currency into a country, and that is they usually have to pass laws, and I believe they're called legal tender laws. So if you wanted me to appear in front of a group for you, and I said, well, I need to get compensated for that, and you said, well, Daniel, we're going to pay you in Federal Reserve notes, and I happen to refuse and said, you know what, I don't want those Federal Reserve notes. I'd rather have something tangible, kind of person I am. Guess what? You could probably have me arrested. Why? Because we have in the United States of America legal tender laws. If we were to look at our currency, which we'll do later in the program or whatever, we'll see that it says, this currency is legal tender. The interesting thing is, if you go back in time a little in the U.S., and I believe not that far back, 1958, we had what were called silver certificates. Rather interesting. They look like dollars. They were dollars, by the way. But the interesting thing was, instead of saying that, this is legal tender for all debts public and private, it said payable to the bearer on demand at any U.S. bank or Federal Reserve, 1 ounce of silver for every dollar. So this is an interesting thing about our currency. It used to be backed, and if any of you happen to live through the 70s, which I did, we remember words like the energy crisis, and we remember words like inflation. How many of us know or even think that in 1972, Nixon woke up, realized that the French were very smart because they were saying, we've got 35 of these dollars. And for every $35, you used to get an ounce of gold back then. And de Gaulle, he was a very smart man. He takes the 35 of paper dollars and he says, give me the ounce of gold. Well, needless to say, Nixon said, you know what, we're running out of gold. So he did what's called shut the gold window, trying to maintain some of our gold in Fort Knox, evidently, because it was just flowing out the door because of all this paper currency. See, the Bank of International Settlements used to settle all global transactions in gold. But in 1972, Nixon said, stop it. And why that's important is, does anybody remember what life was like in 73 and 74 and 75 and 76 and 77? I happened to be in high school at the time, and I'm like, gee, what happened to the price of gas? What happened to the price of this? The prices on everything went up. And it's not that the prices went up. What actually happened in the 70s is because we stopped exchanging a tangible item, in this case gold, for our paper dollars with foreigners, the foreigners all of a sudden said, you know, we want more dollars. Now, lucky for Nixon and Kissinger and company, they made a pretty good deal with the Saudis. You've heard of the House of Saud. We'll get into them maybe on another show too. But the deal they made with the Saudis is interesting. I mean, you think about it. Okay, here are these people, they live in the Middle East, and we're going to what? Give them AWACS, you know? That's interesting. If you guys know what F-15s are, AWACS, all right, that's a whole other thing. But where I'm going with the House of Saud is the Saudi royal family decided that they would only sell on global markets their oil for dollars. Why that was big was that created for the United States of America what is known as a petrodollar. Okay? This petrodollar, gee, that's about the only thing that's backing our dollar right now, and that's the wake-up call. Part of today's show is wake up. We're facing currency devaluation. This is going to harm me, it's going to harm you, it's going to harm all the people around us. It's going to harm our children and our children's children. This is not the first time in history, but this currency devaluation, and quote, the paper dollar and the petrodollar, it's interesting after the, in that 70s, during that, quote, energy crisis, and how the Saudis made that, whether you want to call it a deal or just agreement with us, that all of a sudden they started getting all of our military aid. How could that be? Let's think. These guys, the royal family, they need AWACS planes. Does anybody want to go on the web and find out what you can do with an AWACS? I used to build and test weapon systems. Having an AWACS plane is pretty darn handy, let alone a bunch of F-15s that you can run around and do things. That might even, that give you some, I would say, some outreach and muscle. But anyway, that's the Sauds, that's a whole other story. Where I was going was currency and paper currency. We, even the people in the town of Sharon, get affected by this. We, even the people in the town of Sharon, are going to face what? Higher taxes. And those higher taxes to what? To pay debts that, of course, our government bodies incur. And we're going to have to pay it with, we're thinking money that's going to cost, or money that's going to be valued less and less. So it's going to take more and more of that money. So I don't know about all of you, but, let's see, the dollar's lost 30% in the past 3-4 years. 30% is a big drop, folks. Talk to someone in Europe who now wants to come here and spend their euros because they buy more. But have you all got a 30% raise? I don't know about you, but my neighbors didn't. And the people that I know on Social Security who, of all things, have to pay taxes upon receiving Social Security, they didn't get a 30% raise. Geez, I look around and did the Sharon employees, those people who are town employees, did they get a 30% raise? Did our teachers get a 30% raise? Once again, this dollar now buys 30% less on world markets. Interesting things about the dollar. Do you realize the dollar is used as reserve currency for foreign nations? Yeah. So if Australia says they want to buy oil or some other commodity, they need dollars. That keeps people using dollars. And why that's important to us as Americans is because they use dollars, it helps hide the inflation to a certain degree. But what are we going to do when those foreigners no longer want to hold dollars? And those dollars that we've given them, I believe there were truckloads in Iraq. We'll get into Iraq with another dollar story. But when those dollars repatriate themselves back here, what's that going to do to our economy? The one that used to produce, now we're the world's greatest consumer, we're the world's greatest debtor nation. If we're such a great economy, how come we can't pay our debts? Well, that was my real story for you. And I look forward to telling you some more real stories. And we'll get further into the dollar. Not only the creation of it, but maybe we'll find out who's behind it. And thank you.